And here, got a lot to go over today. But first, don't forget to hit the like and subscribe button if you enjoy what you're seeing. And also, one day, either later in the week or over the weekend, I'll be doing another altcoin spotlight. I haven't decided the exact day, just whenever the momentum is right. But beforehand, I will be letting everyone know exactly which day I will be doing that. Remember, the last altcoin spotlight I did was on FitFi Step App, and that did go up big time right around when I posted the video. So we can look forward to that. Let's dive into the markets here. Flat day again, down 2%, 29,200. Not much to report in terms of price action these days, just hovering right around 30 there. Get right into the news. Terra, let's see, the Terra's South Korean Seoul office closure was purely coincidence. Do Kwon. So the article goes on to say Terraform Labs closed the two offices in Busan and Seoul after shareholders meeting on April 30th, just days before, about 3 days before USD and Luna collapsed. So this is just kind of the FUD in here. These companies, these exchanges especially, they're moving locations, they're moving countries all the time. Binance, they've been in Japan, they've been in Hong Kong, they've been in China, they've been in Singapore for a while. They didn't even have an office. They're rumored to be in Dubai now, and then they also have the U.S. office, and then they've just picked Paris to be their European office. So, exchanges especially, or the big coins that always move in their headquarters. Nothing out of the ordinary. I do think Do Kwon moving the Terra headquarters from Seoul to Singapore 3 days before the crash, that is purely coincidence in my opinion. Just FUD there. More on Terra. South Korea may hold exchanges accountable for the Terra crash. South Korea's ruling party is reportedly set to meet the 5 biggest local crypto exchanges on Tuesday to discuss Terra's collapse, and they might decide to hold the exchanges responsible for failing to protect investors during the crash. I'm not really a big fan of that. Everyone knows the risks invested in crypto. Any of these coins can rug pull or go to zero at any time. The rules are pretty simple in terms of exchanges. If it's a hack and it's the exchange's fault, then the exchange compensates all the users. But if a coin rug pulls or just goes to zero or drops quickly, the exchange is not on the hook. So I do not think this would be a necessary idea for South Korea to hold the exchanges responsible. That could also set a precedent. And anytime a coin rug pulls, the exchanges are just going to be having to pay up. It's just do your own due diligence, especially with stable coins. That's all we've been hearing for years. The stable coin is going to go to zero. People thought it was Tether. People thought it was Waves. Turned out to be Terra first, but that's all the FUD we've been hearing. You got to do your due diligence. It's not the exchange's fault. One exchange has reimbursed their customers. They reimbursed all the UST holders at the $1 peg. It's called Knox Exchange. I hadn't heard of it. It's in Brazil, but then if you look at the total amount they reimbursed, only 127,000 USD. So this exchange isn't really big to begin with, and there were not too many UST holders anyway. So it sounds like they're probably just doing this to kind of win the good graces of the Brazilian traders. They are a newer exchange, remember? It's totally fine. Moving on, crypto execs at Coinbase, MicroStrategy, and Marathon are buying the dip. So this is, so remember Coinbase, they came out with a quarterly report 2 weeks ago, and then so the headlines made it sound like it had very disappointing numbers, but really the revenues went down basically just because the crypto market went down considerably. This happened to all exchanges. And plus, obviously trading volumes are going to be down versus the year-over-year versus Q1 of 2021, which was the boom when it went up to 60,000. So every exchange, their volumes were down, but the headlines just spewed it as, Coinbase had a terrible quarter. Are they going to recover? So the stock went down 25% that day. I highlighted on my show here that it was a good buy in the dip opportunity, and a bunch of other people agreed with me. Coinbase founder Fred Ezram, he bought $75 million of Coinbase stock right after the 25% plunge 2 weeks ago, the day after the quarterly report. Kathy Wood as well, right here, she bought $29 million worth of Coinbase stock the day after the crash, and then since then, the Coinbase stock is up 25%, so it recouped all the 25% loss from that FUD-related earnings reports. Moving on, FTX reportedly seeks acquisitions in the brokerage space. We've been seeing a lot of this. FTX, they just bought a stake in In Robinhood, this time they're looking at a couple other companies, Webull, Apex Clearing, Public.com. They've been talking to them. They're smaller stock trading companies. So FTX, clearly they're trying to be sort of the hybrid market conglomerate with a little bit of stock trading, a little bit of crypto, a little bit of retail investors, a little bit of institutional investors. That definitely seems to be their goal. Is it too much spending, though, is the question. As we've discussed, Coinbase and Crypto.com have been kind of cutting costs, or at least just not spending as much as they were a few months ago. Binance has been spending a lot, but as you can see here, Binance is in a league of their own, so they can spend whenever. And then FTX, the surprising one that's been spending a ton. So if you look at the trading volumes on a day-to-day basis here, just to see how big all the exchanges are, so Binance, they're head and shoulders number one, 14 million in trading volume, and then FTX and Coinbase are tied for 2 and 3 at $1.9 million. So Binance, they're like the De Beers of crypto exchanges. They're in a league of their own. They're number one by a mile, and global macro conditions just don't seem to affect them. But the conditions do affect all the other exchanges here. So it might raise some red flag, as FTX, considering that they're not even close to Binance. They're dead equal to Coinbase, whose trimming cost is FTX spending a little bit too much here. Tough to say. Only time will tell, but remember the three owners of those exchanges, they are totally different ages. CZ is 44, Brian Armstrong is 39. So Bankman-Fried is the youngest of the three at only 30, and he does have a little bit less experience. So with these things, I tend to favor just age, more years of experience. These two, they've been around more, bull and bear cycles. That doesn't mean Sam Bankman-Fried's grand sort of acquisition strategy is going to fail. Only time will tell, but I tend to favor older, more experienced CEOs in these situations. But who knows? I could be wrong. Moving on, Adam Newmann, the former founder of WeWork, he's entering the blockchain space. Crypto is kind of becoming the place for entrepreneurial people to, have a second coming to, that's basically what the industry is turning into, which is fine. He raised $7 million for a company called Flow Carbon. Flow Carbon's mission is to drive billions of dollars directly to projects that reduce or remove carbon from the atmosphere by creating the first open protocol for tokenizing live certified carbon credits from projects around the globe. Now, it sounds like kind of don't really know what they're talking about. There's a lot of these carbon credit projects, the environmentally friendly projects, are becoming very trendy. It all sort of stems from the Bitcoin mining, which that is not environmentally friendly at all. So these environmentally friendly projects have gained a following. So $70 million fundraise, private sale, and a public sale. I like that. I do think public sales are going to come back in style with the the flat market. People got to make their profit somewhere, and if Bitcoin trades range bound from 30,000 to 40,000 over the next year and a half, that's just not enough profits for the average person in the industry. So public sales are one good way for people to do the due diligence and invest in coins and hopefully make profits. But so yeah, $70 million. The lead investor was Andreessen Horowitz, is their crypto unit. We've talked about them before. They're the number one crypto VC by far. And then a bunch of other VCs invested that I haven't heard of. That doesn't mean they're not good investments. They're not good VCs. They're much smaller. It does appear that maybe some of the other big VCs that are not Andreessen Horowitz might have been a little scared off by Adam Newmann and his WeWork past, but all you need is one sort of stamp of approval here, Andreessen Horowitz, and that gains the project some traction. So we'll see if this is successful or not. The first thing he did right, in my opinion, keeping the fundraise at just $70 million. The old Adam Newmann, he would have had to have been the biggest ever. He would have had to do a multi-$100 million fundraise. That just doesn't work in crypto, as evidenced by EOS and Telegram, who did by far and away the two biggest fundraisers, ICOs, in 2018. That turned out to be an utter disaster. You do not want to put a target on your back by being the biggest fundraise, biggest ICO. So $70 million, it's a perfect amount. It's still on the high end. I mean, he's not keeping it lean. If he was keeping it lean, that would be $5-10 million. So don't get me wrong, he's still raising a lot of money, $70 million. But a lot of projects are raising right in that 60 to 70 million range, so it's on the high end, but you still kind of blend in and don't make yourself a target for just raising too much money, basically. I think that's smart. 70 million, it's a good amount. Moving on, so we covered this yesterday, Avalanche. So I think this is actually going to be a good buy and dip opportunity. So they lost $60 million, but this, even though the headlines yesterday seemed kind of like cataclysmic, oh, they lost $60 million, it was viewed very negatively, and the coin went down big time yesterday. But some people, the people I talked to, a lot of them were expecting the losses to be in the billions. Remember, Binance lost $1.6 billion, Hashed Wallet Fund lost $3.5 billion. Since Avalanche only has a $7 billion market cap, if their losses were comparable to those, that would have been game over. So the $60 million was actually kind of relieving, of course, since the headlines were negative. The stock did go down, the coin did go down big time. So here's Avalanche, here's the amount it went down. I don't know the percentage, but it went down a lot, just due to the headlines being a little more FUD-sounding than they needed to be. So I think Avalanche is a good buy and dip opportunity. As you can see, it has vastly underperformed BTC in the last 30 days just due to the Terra debacle, because even before they released the 60 million figure, everyone knew Avalanche was a Terra investor and they were going to lose money. So the 30-day, they're down 60%, whereas BTC is only down 28%. So they vastly underperformed the rest of the market, but that $60 million loss, in my opinion, is pretty good. I mean, look at this 30-day chart for a company with good management, good fundamentals. Avalanche down 71 to 28 in 30 days. That definitely seems like a good buy and dip opportunity for me. That's it. I'll be back with a new episode tomorrow. Hope everybody enjoyed this one. Don't forget to hit the like and subscribe button, and see you tomorrow.